Welcome back to another episode of Rawstocks. This is Rustic, and today we're going to be taking a look at Tesla's chart. We're going to look at where price came from, where price ended today, and where price is likely to head tomorrow and into the rest of the week. Before we get started, don't forget to check out the links in the description below. We're currently running a 50% off 1 month of Rawstocks premium membership. Normally $25. We'll make it $12.50 for the month. For the first month, give yourself a chance to try it out. Also $50 off the annual subscription, which is $250. Normally now $200 with the code. Normally at the $250 rate, that gives you 2 free months. Also in the description, there's a link to the Top Step funded trading combine. If you're interested in ever becoming a futures funded trader like myself, you can click the link and try to do the trading combine and see if you can pass it. So let's go ahead and get into the charts themselves. Going to use the same charts we were talking about on the weekend video, just show you an update on kind of where we're headed and what we had going on. So on the daily chart, we had us delivering down into a daily fair value gap. Right, we've already come down, test the boundaries. We're continuing to draw on the liquidity that's inside that fair value gap. Now we've punched through it and we're back outside that bullish fair value gap. So that's on the daily chart. Using the daily chart, what we're looking at is anchoring our fib to this previous high, January 30th, to the previous low, looking at a standard deviation of in between 1 and 2, which would put us at 217.18 all the way up to 238.31. Targets are still the same. First, we got to clear this 200 level, which has been sticky. Potential that we gap over it overnight, and then we don't come back to it. Okay, if we do that and we gap over 200, first level is the gap fill 206.87. Or 206.77 if you want to like use the exact low of the candle from January 24th. So we got to clear that level first. Then we got the negative 0.62 at 209.15, which is a fib extension level. Right? And then we have our first standard deviation. We have 1.5 standard deviations at 227.75, and we got 2 standard deviations at 238.31. So we have some upside targets, some liquidity levels. Inside there, we also have lots of fair value gaps inside this daily range from inside January. And so definitely lots of things to target. Now, if we were to have topped out today and be heading lower, which is not what I suspect is happening, what we'd be looking for is a draw back into the daily fair value gap. And if that daily fair value gap gets taken out and inverted, we'd be looking to come back down and test this previous low down at 181, 182, right? Maybe bounce off some of these fib levels. Ultimately, be running a test on 175 for a new low. I don't think that's going to happen. Again, we're seeing bullish activity. We had the breakout from the 15th with the correction. I think we're going to see some more breaking out as we start to target that gap fill in those higher levels of those standard deviations. So again, that standard deviation is based on the high from January 30th to the low of February 5th, which is one way to measure potential targets using standard deviation. So let's drop into the 4-hour chart. On the 4-hour chart, we used a different fib anchoring. We used the low here to the high here, measuring the correction, which you can see brought us down into the optimal trade entry range. And using that, we have very similar targets. They're a little bit different, but they're very similar. We have 1 standard deviation being at 215.66, 1.5 at 225.86, and the 2 full standard deviations at 236.05. So you can tell there's just a couple dollars difference in measuring those, because obviously these highs were relatively equal. They weren't perfectly equal, so there's going to be some discrepancy in which fib tool or which point you anchor your fib to. But the point is that either way, it gives us very similar price targets. Okay, now on the 4-hour chart, you see with the candle we had today, the opening 4-hour candle, we set a nice, very large bullish fair value gap. Now, I do expect this to hold. You can see we came down and we tested it into the final 4-hour candle here, but we held it so far. Nothing says we can't dip into it a little bit further, but I think it's going to hold. And again, I think we might see a gap up, but that's speculative at this point. We can't, we can anticipate, but we can't expect. And so if we start to draw back down into this fair value gap, again, you could extend the trend line here if you want to look at that. right? And you could say that if we pop that back down in here over the next day or two, right, maybe test this trend line again inside that fair value gap, you'd be looking to load calls, anywhere from 3 to 5 weeks out, maybe a couple months, depending on what kind of trade you want to take. But you'd be just using these standard deviation targets, right, of the 1, the 1.5, and the 2 as your potential strike prices to aim for. So if we drop down into the 1 hour, we talked about the potential of a Judas swing happening on Friday, right? We had these stops rated on both sides, bit of a turtle soup setup, right? And we pulled down into this 1 hour order block. Posted in the video, we need this 1 hour order block to hold. It'll give us confirmation that this was a Judas swing that was just trying to run out the liquidity down here. Sure enough, it was. We saw it rip up, right? We come back down. On the 1 hour, we also have a fair value gap right here between 192.97, so 193 and 196. So we could totally pop back down into that 1 hour fair value gap, draw on some more liquidity before we see us run higher. What I think is going to happen is I think that we're going to attack this order block, come in here. A lot of times we find rejection right at the entry of an order block, pop back down, take it out. So we'll be watching for either of those things to happen. That order block low is at 202.66, give or take. That order block high is at the previous high of 205.39. So let's just say we come back down. Let's say we drop it, and then I think we'll punch through it. Right? If we punch through it, we might come back down and build some more structure. And then at that point, we'd be attacking the order block up at 209 all the way up to 213. Okay, so those are entirely possible things that could happen. Maybe we see this drop down into the fair value gap first before we see price run at that order block. Entirely possible. I think we're done down in this range. I think we're going to attack 200 and above very quickly, and then we'll decide if we want to, hang out up there if it's sustainable, or then we get a sharp sell-off that'll bring us back down into the low 200s. Again, my eventual target, you guys have seen, is much higher in the 215 all the way up to 230s range, as I think we're going to work our way up there. I think things are going to get moving very quickly, but I definitely could be wrong. Last, I want to drop down into the 5-minute chart. In the 5-minute chart, we can just have another look, a little bit closer look at how we, sold off, had that Judas swing. The manipulative move in the false direction makes us look like we're selling off. If you were to kind of draw, a trend line-ish type of thing here, right? Either way, from the high or just these tops here, right? You could see, lower highs, right? As we're coming down off of this higher high. And it looks like it's done. It looks like we're going to, run these lows, potentially dump back down, into the mid 180s. But the fact that we ended right in that order block and then out of the gate today just ripped up, that tells me that we are not going lower than that anytime soon. You can also see on this chart, we got a resistance trend line above that's connecting some high points, and we could expect that we might see a run up to test that resistance line as we're just coming off of the support line. Right, that we might run up to test that resistance line up in the depending how quickly we get there, 210, 211, 209, 210, 211 range. Right, want to see that pop up, set a new high, and then we might sell down from there again. Depending on how long it takes, could bring us back down into the low 200s or high 190s. So that's what I got for you guys today. Hopefully this has been insightful. Don't forget to smash a like, subscribe, share with all your friends. Again, don't forget to check out the links in the description below. Support the channel in any way you can. It's free to be a community member. If you just want to hang out in the Rawstocks Discord, doesn't cost a dime. But also if you want access to the Rawstocks callouts, which are doing very well this year. We're averaging over $200 a day every single day, and that's an average, so some days we do lose, but averaging over $200 a day since the beginning of the year. And you get access to that as a premium member. You get access to our book study, which is Unlocking the Success in the ICT 2022 mentorships currently. We might do future book studies for other materials or other smart money concepts education studies as premium members. And then you also get access to the premium chat. Everything else is free for regular members. You get a lot of education. You get a lot of access to all the different chats as well. So hopefully you guys have found support in this video. And I look forward to talking to you guys on the next one.